right, joining me is Matt Hougan, Chief Investment Officer at Bitwise. Of course, Bitwise is the largest crypto index fund manager in the U.S., and they've obviously been helping to spearhead the charge in bringing crypto to the ETF wrapper with both spot and futures-based Bitcoin and Ether ETFs, along with some other products. But when I think of Bitwise, one of the first things that comes to mind for me is education. So Bitwise has made it really a core foundation of their business to help educate the marketplace on crypto. And I'll tell you, as I was thinking through inaugural guests for this podcast, Matt was simply at the top of the list because nobody does a better job than Matt of distilling complex topics into something digestible. And that's exactly what I'm going for with ETF Prime and now Crypto Prime. And I want to help really bring crypto education to the masses. So Matt, I am so glad to have you here. Thank you for joining me.
I'm honored to be here. Thanks for the kind invitation. I would say you are at the very top of helping make complex things seem simple to people. So I'm honored to be on Crypto Prime. I'm excited to have this podcast in the world, and I can't wait to be a listener in addition to a guest.
Well, thank you. You know, it's funny because we have known each other for a long time now on the ETF side. And so it is a little bit surreal to be connecting on the topic of crypto. You are clearly an early mover here. Hopefully I'm not too late to the game. I don't think, right?
No, it's still super early in this space. I'd say maybe we're first, second inning. It's earlier than most people anticipate. So you're not late at all. You're on the early side.
All right. Well, you were in ETFs at like the top of the first inning, and I think pretty darn early to crypto. So I'm following in your footsteps here. But look, I've been looking forward to this particular conversation because every time that we've chatted in the past, there has been some sort of ETF angle, right? We've talked about Bitcoin and Ether ETFs, but there's always been an ETF angle. That's not going to be the case here today. Our focus is solely going to be on crypto and specifically crypto's real world use cases. And I think I told you prior to coming on, one of my goals with this podcast is to really help serve as a bridge between TradFi and DeFi. I feel like there's been somewhat of a wall here. And I think one of the reasons for that is because TradFi still has a lot of skepticism around crypto. I think some of that is certainly justified, but I think some of it comes from the fear of the unknown, right? And maybe a lack of understanding. And I do think there's a belief among some that there are no real world use cases for crypto, right? That crypto is sort of this side casino where degenerates go to gamble, number go up. I guess, do you agree with that there is sort of this perception issue around crypto?
I think there is a perception issue around crypto. I think people don't see real world applications even when they're staring them in the face. And I think there are a few examples of crypto applications that are staring you in the face and gaining real world traction. So yeah, people classify it as crypto and sort of put it on this side bucket, but it's increasingly going mainstream if you look at the data that's right there, and excited to dig into that.
Why do you think there is that perception though? I mean, why has it been? Because there's just been a focus on number go up because we've seen the returns from so many crypto assets. Is that sucking the oxygen out of the room? And so because of that, people aren't focusing on the real underlying use cases that exist within the ecosystem?
You know, I actually think it's a classic case of anchoring bias, Nate. You know, anchoring bias is the idea that the first thing you hear about something sort of positions you somewhere, and it's hard to overcome that. And many people, the first thing they hear about crypto, maybe it was Silk Road and criminal activity, maybe it was FTX and scams, maybe it's number go up, and maybe it's meme coins. None of it is quite as real world as what you see underneath the surface. The first time someone encounters crypto is not through stablecoins, right? Digital dollars on the blockchain that are sort of transforming some emerging market economies. And I think that's the problem. I think it's a classic case of anchoring bias, being blind to reality because of the flashy headlines. But again, if you look underneath the surface, you can see these real world applications building.
I saw, I think it was last week or maybe it was a couple of weeks ago, you delivered the keynote at the Barron's Advisor 100 Summit, which is obviously for some of the top financial advisors in the U.S. And you said something to the effect that it was clear that a lot more of these advisors actually do know now own Bitcoin or some other crypto asset in their personal portfolios, which is great. But I don't want to belabor the point. Do you think that's because of this perception of number go up, or did you sense that there is actually an evolving understanding in terms of the longer term use cases here? Does that make sense? I mean, what was your perception of that understanding of crypto among that particular crowd, which is clearly a TradFi crowd?
It's a TradFi crowd, that's right, but it's a unique TradFi crowd, and I think it may be at the sort of vanguard of where the industry is going. I didn't mean to make that pun, but there it is. The thing about this crowd that differed from last year, because last year I gave a speech to the audience. I asked how many people own crypto, and like a few hands went up. And this year it was 70 or 80% of the room. And I think the difference is the launch of ETFs, the entry of BlackRock into the space, legitimized it. It broke that anchoring bias. It forced people to reevaluate this on the merits. When Larry Fink is saying this is a legitimate, financial innovation that could change the way finance works, when Larry Fink is building, money market funds built on Ethereum, finance people pay attention to that. And I think because they did, they reevaluated it, they re-underwrote it, and I think many of them decided they wanted a small allocation. I think you're going to see that more broadly as more TradFi firms come into this space, as we get crypto legislation and regulation, as it becomes more mainstream. It'll sort of shock people awake to say, hold on, when I thought about this, monkey coins and whatever, isn't really what crypto is about. There's this whole new, more legitimate thing. And sort of, I think you'll see this repeat in the broader population in the coming months.
Okay, so perfect segue here. You mentioned tokenization, which I want to get into. Let's talk about some of the real world use cases for crypto. And for our discussion today, Matt, let's set Bitcoin aside. I know that's an easy one to point to, but my sense is actually that TradFi is coming around on Bitcoin slowly, but they are coming around. And so as I was poking around on the Bitwise website, I saw that last year you published a piece where you laid out 12 real world stories of how people are using crypto right now. And by the way, I would encourage everyone to go check that out. It's at bitwiseinvestments.com. Just a great piece. And we're certainly not going to get to all 12 of those use cases, but I want to ask you about several of these. And in my mind, the obvious place to start is stablecoins, because these do seem to be the clearest use case at the moment. So do you agree with that? Is that the easiest example to point to?
Yeah, I think it's the easiest example to point through. I think it's a clear killer app. And in my experience, even people who are skeptical of crypto understand the sort of transformative nature of what stablecoins can be. And I think there are really 2 or 3 different stories there, each of which could be a multi-trillion-dollar opportunity. That's how big I think it is. One way to think of stablecoins, Nate, is just digital dollars on a blockchain. But if you think about what that means that every person around the world who has a cell phone in any country around the world effectively has a US bank account at their fingertips. A US bank account, easily accessible in every country around the world, is a killer app, right? That is a breakthrough idea. And then when you build on top of that, the fact that they can move money instantaneously at low fees or send money across borders, it's incredible. Even here domestically, I would argue that our current payment infrastructure is imperfect at best. Sclerotic, it would be a more accurate description. We pay 2.9% Visa interchange fees every time we buy something. Stablecoins could drop that to 0. So whether you're looking internationally or you're looking domestically, it's easy to see these being multi-trillion-dollar markets, and you're seeing big firms like PayPal and Revolut move into the space. I suspect you'll see JP Morgan and others move into the space in the coming years. I think it's a clear killer app of crypto.
I told you one of my goals with this podcast is I do want to serve as a bridge between TradFi and DeFi. And one of the pushbacks I hear from our TradFi friends, of which I know we both have many, is they'll say, what problem are stablecoins solving? that hasn't already been solved by, say, Venmo? Or you mentioned PayPal. I know PayPal is getting more involved in crypto, but just if you think traditional PayPal, how would you respond to that?
Yeah, I mean, setting aside the idea that there are people who don't live in the United States, who don't have access to our dollar, which is a massive major market, internally, PayPal, Venmo, etc., is just goofy. Imagine if I couldn't send you an email from my Gmail account to your Microsoft account. You would think that's ridiculous. You couldn't send it from Microsoft to Yahoo. That's the way our existing financial apps work. You can't send money from Cash App to Venmo. Sort of what century are we living in? So, that'd be the same thing as saying back in the day that AOL is all we need for email communication. That's just not the way things work. It should be interoperable. It should be free exchange. It should be instantaneous settlement without sort of complicated credit schemes like people imagine. And it just seems ridiculous to me that we have this fractured infrastructure, and stablecoins solve that instantaneously and at scale. So I guess that's how I would push back to the domestic.
Yeah, and I would add to that, as you know, I mean, some of these TradFi platforms, they're limited by country. There may be dollar limits on how much you can send. It does get down to, accessibility and then just restrictions that are in place. Something else on this topic, because I do want to get to some other use cases. I'm not sure if you saw this last week. I know I like to have a lot of fun on X, especially as it pertains to crypto, but I tweeted something out to the effect of how mind-boggling it is to me that our country doesn't seem to be embracing crypto innovation. We could talk more about that if you like, if we have time. But my point as it pertains to stablecoins was that a key asset that underpins stablecoins is U.S. Treasuries, right? And so I feel like greater adoption of stablecoins would actually benefit the U.S. and the U.S. dollar. Do you agree with that? That seems pretty straightforward to me.
Yeah, I might go as far as saying it's our only hope. Right? I mean, stablecoins are already one of the top 20 holders of treasuries in the world. If they were countries, they would rank in the top 20 of countries. And the idea of being able to export dollar demand at a time when the U.S. currency is under question as a reserve asset, or at least facing other challengers, and the ability to sort of issue more debt without raising interest rates, it's a win-win-win. I think that's actually why you're seeing people on both sides of the aisle come out in support of stablecoin legislation. It is a huge win for the U.S. It could extend dollar dominance for decades to come, and I think it would be irresponsible of us not to seize that opportunity as a country.
Yeah, my hot take on this, which you may have seen, and this is for another podcast, is that perhaps Bitcoin scares the living daylights out of the U.S. government. It's viewed as a threat to the U.S. dollar, and so they're applying that fear to everything else as it pertains to crypto. But again, topic for another time. Let's move on. We talked about tokenization a little bit earlier. I think that's a very clear real-world use case for crypto. We already have a number of examples of tokenized money market funds out there and other real-world assets. I'm curious if you were explaining again to our TradFi friends what the benefits of tokenization are, which I'm sure you've done many times already. How do you describe this? Because again, I'll hear them say things like, nothing is going to be more efficient than the ETF wrapper. There's no way an investor is going to get a better deal than that. And so what does tokenization solve? And Matt, I know we're still very early, but just how would you lay this out at a very basic level?
Yeah, I mean, a few different ways. One, how'd it go buying your ETF on Saturday? I mean, one issue that tokenization solves, just because it's so much more efficient, is it trades 24/7, 365. If you get inflows into your fund on Friday and you need to gain exposure on Saturday to interest income or to make adjustments to geopolitical events, you can't do that in the TradFi wrapper. Now, it's not the case that traditional finance couldn't potentially expand to offer 24/7, 365 trading, but from the ETF experience that it's hard for these incumbents to adjust. It wasn't the case that mutual funds couldn't lower their costs or do in-kind redemptions to be more tax efficient to compete with ETFs, but they didn't. And so just at a starting level, I would point out that 24/7, 365 is better than 9:30 to 4:30 5 days a week, except for holidays. So that is one major benefit. The second is that it's global in nature, right? Our markets are still fractured. We're living in sort of a fractured nation-state world in the traditional finance space, and the world is increasingly global. And tokenization just leaps over that challenge with none of the challenges that evolve in getting there. And then the third is just sort of every generation finds its own way of expressing money into the market. There was the single stocks, and then there was mutual funds served a different generation. ETFs served our generation. I think it's the epitome of hubris to assume that we're at the end of history from financial innovation and that there will never be another better leap forward. And I suspect that it's tokenization. It's already working out. You're already seeing it attract assets.
Going back to stable coins, I guess to meld the last two cases that we're talking about, do you see tokenized money market funds as disruptors to existing stable coins in that the yield from the underlying assets held by the money market funds can be passed on to holders? Whereas if you look at Tether, that's just pocketing all of the yield, and they're making more money than BlackRock, by the way. But does that make stable coins actually ripe for discussion? We were talking about ETFs here, but are stable coins ripe for disruption, or is this really just an evolution, altogether? How do you think about that?
Yeah, it's a good question. It comes down to some regulatory decisions that people make. But I do, if I were laying bets, I would bet that stable coins eventually find a way to pass interest income on to their investors. It's too big of an opportunity. And you're seeing that in the inroads that money market funds are making. In the end, you're going to have both. We have both in the traditional finance system, right? You can have a JP Morgan account that pays you 1% interest or a local bank account that pays you 5%. I suspect you'll have highly liquid stable coins that arrogate the interest and others that pass them on. But my hope is that we move more toward the era where they pass on that interest income. I think that's the direction of travel.
Just to put a period on tokenization, though, it sounds like, and I'm not asking you for a time frame, your expectation is that we will ultimately see both private and public assets tokenized. Because I know right now you can get a lot of TradFi to say, okay, I can understand the use cases maybe around private assets or maybe some more illiquid assets and how tokenization can help that. But on the public side, there's some more skepticism. But it sounds like obviously you think the direction of travel is both longer term.
I think it's both longer term. And I think the way you're going to see it and the way you are seeing it in the market is that these tokenized projects are appealing first to crypto natives. Like the people using BlackRock's tokenized money market fund right now are crypto natives. And as a result of that, it's becoming, it will eventually be a multi-billion-dollar market, well-established, well-developed. And after it gets there, then it will start pulling in more TradFi people. But yes, I expect both public assets and private assets to be tokenized and to be trading on more efficient rails. Our existing system is just too slow, too costly, and too hard to maintain.
Okay, another good example of a use case for crypto, which I think you're going to like this one, in my mind, is Polymarket, which is actually something I discussed on my first episode. And it's something I've tweeted about as well. But if you look at how, say, Bloomberg is now integrating Polymarket data into their platform, I see Polymarket data referenced pretty much everywhere in the media right now, mainstream media, not just crypto-centric media. There's obviously currently a huge focus on the upcoming presidential election prediction markets. Those, Matt, seem pretty darn tangible in real world to me. I assume you agree with that.
That's exactly right, and this is the direction of travel for many parts of this real world use case, where you can be a consumer of Polymarket's information and not know it's crypto related at all. It's just a website with interesting information. And it's got massive scale, but Polymarket can only exist built on crypto rails. The other prediction markets, for a variety of reasons, and not just regulatory reasons, have been unable to scale in the way that Polymarket does. Polymarket's crypto nature allowed it to do it and gave it, complete escape velocity. It's now, my uncle knows what Polymarket is. He doesn't have a wallet, but he uses it to judge what's going on in the election space. I think it's a great example. And I think we're going to see 10 of these examples in the next couple of years of crypto going truly mainstream.
We'll talk a little bit about the regulatory environment here in a moment, but do you ultimately expect that to be opened up in the U.S. poly market?
Well, there's some legal battles going on right now around that, but I think the legal direction of travel would be for that to be opened up to the U.S. market. You're right. Currently, U.S. users can't access it. I think they'll be able to, and I think the prediction markets will be much more significant in the future than they are today.
Okay, before we talk regulation, what are maybe 2 or 3 other real-world use cases you see for crypto? And again, I know in the Bitwise paper, you have a bunch of great examples. I think you mentioned XP, which is like a ticket master killer,
Yep.
Forecaster, right, and decentralized social media, Helium Mobile, which is really interesting to me. But what are maybe a couple of other examples that have you particularly excited?
Yeah, I'll give you HiveMapper. I think HiveMapper is really interesting. The way HiveMapper work is it's a global mapping and photo system. So if you think about the Google Photos that you can look at when you're looking for a thing on a map, those are from individual Google paid cars that drive around and take photos of places every 5 or 6 years. HiveMapper has flipped that on its head. You can install a HiveMapper camera in your car, and it takes 40 photos everywhere you're going, incredible resolution, and they're constantly uploaded. And because crypto allows you to compensate legions of people with infinite efficiency, it has much more updated photos than even Google or Apple or any other mapping service. And you're increasingly seeing mapping services contract with HiveMapper so they have more real-time data. People forget that one of crypto's killer apps is the ability to monetize communities and get communities to do things at scale really fast. And HiveMapper is a perfect example of that. I think it's going to take over the mapping and photography market. And I think it's really significant. It's really gaining traction right now.
Are any others that come to mind in terms of real world use cases? Again, I know there's a bunch out there. Is there another one that you would highlight?
Yeah, I'd go back. I think there's a lot to be said for DeFi and the way it's actually just significantly more efficient at certain things than the traditional financial services industry. I know that DeFi mainly exists within the crypto market, but if you look at the persistent traction of something like Uniswap and the ability to source community liquidity, or something like Aave and the ability to source community lending, I think it's a much more efficient solution, let's say, to private lending than what we have in the traditional market. So again, it's currently captured only within crypto, but it just needs a little bit of regulatory unlock, and I think it could 10x into the TradFi space. So I would keep an eye on sort of the rebirth of DeFi as a theme for the next few years.
All right, just about a minute or two left. You mentioned the regulatory unlock, okay? And I don't know how much you want to touch on this. I'm sure you get passionate about it, but I think about last week we saw SEC Chairman Gary Gensler speak at the Financial Services Committee oversight meeting, which, by the way, there was a great video going around on NFTs and Yankee tickets that I think everyone should watch. But Matt, it does feel like the U.S. government simply is not embracing crypto innovation. It currently just feels confrontational. Do you think that's because we are still so early, or are there bigger structural issues at play here that maybe time can't necessarily solve?
Oh, I actually have a very optimistic take on this. I think it's the dying gasp of a failed philosophy. I actually think Washington has moved on mostly from its hostile attitudes toward crypto. You can see this even in the SEC, which didn't repeal SAB 121, which prevents banks from custodying crypto, but managed to find a way for Bank of New York to walk around SAB 121 and custody crypto. I think Washington is just waiting for an excuse to turn the page on its hostile view towards crypto. And actually, regardless of what happens in the November election, I think you're going to see a significant unlock. I think you're going to see stablecoin legislation, which we previously discussed. I think you'll see SAB 121 reversed. I think you'll see more assets come into the ETF framework. I really think what we've seen over the last 4 years is past its sell-by date, and most of Washington recognizes that. And I think we just need to get past, let's say, January, when the new administration, whatever it is installed, And I think we'll start to see rather significant progress on the regulatory side. So color me an optimist.
So in your mind, it really does come down to time for sure. We just need some more time here, but also it sounds like just education. More people to become educated in Washington, understand what's going on here.
Yeah, I think that's right. And I would toss money into the mix. I'm not above noticing that crypto has a large lobby, or that the bank lobby wants in on the crypto boom. And I think that has a significant influence as well. So it's time, it's education, and it's money. But fortunately, all three of those arrows are pointing in the direction of crypto. They're not pointing against it. So that ties into my optimism.
Well, Matt, this was so much fun today. Thank you for being an early guest and supporting this podcast. I truly appreciate it. Thank you for joining me.
Thank you for having me. I can't wait to listen to all of them.
That was Matt Hougan, Chief Investment Officer at Bitwise. And I really hope everyone enjoyed this episode. I'm really excited to say that Crypto Prime is now available pretty much everywhere. Apple, Spotify, YouTube, you name it. So please leave a review, give it a like, and you can also go directly to cryptoprimepodcast.com. And I'll tell you, I have a spectacular lineup of guests over the next several months. So I hope you'll continue to join me. Thank you.
Crypto Prime is hosted by Nate Geraci, president of OTR Media LLC. Nate is also president of the investment advisory firm The ETF Store. While OTR Media LLC and the ETF Store are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by the ETF Store. This program is for informational purposes only and does not constitute investment advice. Investing in crypto assets involves substantial risk, including the potential loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Visit cryptoprimepodcast.com for more information.